the first part of the complication that's involved in filing your tax return. And I'll talk a little bit about an actual example later, but I wanted to talk too just about the earned income credit. And so assume you have someone who has 3 children and they're qualifying children. They meet the definition of a qualifying child under the tax code. What is that definition? I'm not really going to tell it to you because I want you to go to call 211 and I want you to go get someone to help you prepare your tax return. But if you have 3 children and you're claiming the earned income credit and you've made $3,000 last year, say you're working part-time, you're taking single mom, she's head of household, raising 3 kids, but she can work a little bit part-time during the day, say when the kids are at school, and she made $3,000. If all of those children, those 3 children, qualify for under the earned income credit, she's going to get back $1,361, which is a large sum of money, and that's how much she's going to get back for the earned income credit. But what the earned income credit actually does is it encourages you to work more. So if she's making $3,000, she'll get $1,361. If she can squeeze in a little bit more time during the year and make $5,000, she's going to get back $2,261. If you can find a little bit more time to work, say she makes $7,000, then she's going to get back $3,161. And then if she can work a little bit more, say $10,000, she's going to get back $4,511. So as you earn in this income range, and we're talking now, we started at $3,000, we're up to $10,000 of earned income, you can see that the amount of return that you're getting back in the credit is going up. And basically that peaks out at $13,050. So if someone who is making about $3,000 can find the time, and it's tough, but if they can find the time to make an additional $10,000, the government's going to then go ahead and pay them an extra $5,891. And those are very valuable dollars because they're after tax. So those dollars that are being paid out in the form of an earned income credit aren't going to be taxed additionally. So that's a real big return on someone's investment who's working and have 3 kids. You're going to go from basically making $13,000 to having $18,891. So the difference between $13,000 and $18,000 could be the difference between helping buying food, school supplies for kids. So if you're out there and you're thinking about how much should I work, you can think about that in terms of trying to plan your hours. If you're a social worker or someone else who have clients, it's something you should be talking to your clients about so that they understand that the more they work up to a certain amount, the bigger return they're going to get on the earned income credit. And so going back to the whole idea of the earned income credit and the dependency exemption, here's a situation that I've seen over and over. It's a family, say a single household family, meaning there's one parent who's taking care of multiple kids. An extended relative has passed away, and there's now a cousin who's coming in. And so the mom or dad who's raising 2 kids is also raising their cousin. And they claim the child for the dependency exemption, and then when they go ahead and claim the child for the earned income credit. And the way that the earned income credit works is that it only generally, and this is why you really need to talk to Avita, call 211, and sit down one-on-one with a tax planner. But generally, the earned income credit won't let you claim a child. They won't let you claim, a cousin, where in fact she could claim the 2 children but not her cousin. And the reason they do that is because the earned income credit looks at the parents' generational level down, whereas the dependency exemption looks at grandparents' level down generally. And so you can match those up. And so what will happen is that if you claim, say, your cousin as the 3rd child, eventually the IRS will come back and assess against you because you'll get the money, and the person will go out and spend the money rather quickly, will buy food, buy clothing, buy school supplies for the children, and then a year or two later, the IRS has 3 years to, once you, from your filing date, to go back and review your return and figure out if you've done something wrong. And so they'll pay you the earned income credit when you claim it, and then they'll come back and assess against you. And so if you can't claim, say you max out that credit and you're at about $5,800 and you're not allowed to claim those 3 kids, you're going to get that money most likely. But then later on, you're going to have to pay it back and you're going to owe a debt to the government. And they're going to come back and they can levy your bank accounts. They can issue what's called the Notice of Federal Tax Lien that can affect your credit. And so you don't want to be in the situation of owing the government money down the road. And that's why it's really important, again, to go back, to call 211, talk to a VITA representative, have them help you negotiate these really complicated rules and regulation that govern your filing your tax return. Let them help work through it. Because what happened in that situation that I had? Well, luckily for me, there's a caveat. There's a rule, and then there's a rule that says when you can claim your cousin, and that's when you've adopted the child, or it's been placed, or the child has been placed with you by order of a court. And so it actually turned out that because this person's parent had passed away, the court had actually ordered had in a custody order had granted custody to the person that I was helping. And so we were actually able to send that into the IRS and talk to them and communicate with them and convince them that this person didn't have to pay the money back. But it's always so much better to do it up front. Call 211 and go and talk to the tax preparers at a VITA site or AARP, because they'll help you fix that before a problem happens. The tax clinic at Pine Tree helps people during an exam or afterwards. And so we help people once they have a problem, and you really don't want to be in that position. And so how do you avoid that position? You avoid it by getting proper tax advice, calling 211, and going to talk to VITA. And so that transitions us into exactly what does Pine Tree do? How can Pine Tree Legal Assistance help you with your tax problems? And the first thing you should remember is that you may have been turned away from Pine Tree, or we may not have been able to help you in the past with a separate issue because of income requirements. The tax clinic at Pine Tree receives a grant from the IRS that's separate from the rest of our funding, and we have separate requirements, and we're able to help people who fall between 250% of the poverty line below, and we generally don't have an asset requirement. An asset test. So you can own assets and still call us and qualify for services. We're part of a network of low-income taxpayer clinics that are organized through the Taxpayer Advocate Service at the IRS that are spread out throughout the country. And so when is it that you can call Pine Tree? You call Pine Tree when you have a tax problem. So we help people with audits. And the IRS recently changed the name of an audit because the word itself scares people so much that they've now started calling them examinations. And there are basically 2 main types of examinations, which is a correspondence examination or a field examination. Most people don't ever know that they're going through an audit because they get a letter from the IRS asking for them to send in a certain amount types of information, and they never respond, and then the audit closes. That's about 75% of all examinations or audits are done through the mail through what's called correspondence examination. And so what does that mean? Let's go back to that earned income dependency exemption example where the person has claimed their cousin. They can do it because it's been the child has been placed with them by order of the court, but the IRS is challenging them. They've looked at their tax return and they've basically are questioning whether they can claim this child. And so what an audit basically does, an examination, is they send out a letter and they say you have 30 days to give us the information we're asking for. And by the way, in this letter, we're not going to tell you what specific information we're asking for. We're just telling you we're asking for information, and you've got to call this number and talk to someone who answers the phone. And so you call the phone number, you talk to them, and they'll say, oh, well, we need proof that this person you're claiming is your child, your grandchild, or has been placed with you by order of a court or whatever. And so what will happen is if you talk to them and you can get to that point, then you can then fax in the information or mail it to them, and they'll put it, and then someone will take it and put it in the computer, and then another person later on will come back and look at it and determine whether or not you've met the requirements. It's really important if you do that to fax and not mail, because it's less likely, and studies have shown that it's less likely that they'll lose the information if you fax it instead of mailing. But if you don't want to deal with that yourself, you can call Pine Tree's tax clinic, and the best way to do that is actually to call the Bangor office of Pine Tree, but we help everyone in the state. You call 942-8241 and ask to speak to someone about a tax problem. So again, that number is 207-942-8241. And what we'll do is we'll help you respond to an examination, and we'll actually go ahead and call the people for you, fax in the information, make sure it's been received, and then hopefully resolve the problem if you're in an audit before a debt's been assessed. And so most people are really afraid of an audit. I think they're a really great opportunity to help someone because the debt's not on the books yet. Like the IRS actually assesses a debt against you, and once it's on the books, it's harder to take it off than it is to convince someone to not assess the debt in an examination or audit. So I really like it when clients come in and they're at the beginning of the examination or audit period, because it provides me an opportunity to resolve the issue before a debt's assessed. But that's not the normal client that walks through our door, because what happens? Just like everyone else, if you get a letter from the IRS, it's the same letterhead on every letter, no matter who you are, no matter what correspondence they're sending. And it sends, I'm the same way. I've received correspondence from the IRS, and I deal with them on a daily basis. And when I get that letter, like fear runs through me. I don't want to open it because I don't know what's happening. And I actually met the Commissioner of the Internal Revenue Service, and he said the same thing. When he started working there, and he got correspondence due to the fact that he was an IRS employee, had the same letterhead, and he got the same chills. And he's the guy that runs the organization. So it's a very scary process, and that's why the clinic is here to help you with that. So say you're the type of person, and it happens to all of us, you've gotten all of these letters, you've thrown them in a big plastic bag, and you walk through our door, and here are the letters. What's going on? We're going to take those letters and open them and figure out what's happened. Most likely, you've run through the assessment process. So you didn't respond to the examination. The IRS said, okay, this person didn't respond in 30 days. We're going to go ahead and file some forms and tell you that you owe us this money formally. What happens then? And you've probably seen this on the television, and you've seen it in the form of the commercial. Then the commercial is pennies on the dollar, I'll solve your tax debt for pennies on the dollar. And you probably really want to call that 1-800 number because they're really convincing. And what happens? Well, those are large organizations, corporations that try to do basically the same thing that the tax clinics do for free. And so we're set up to do everything that J.K. Harris is bankrupt now. Ronnie Deutsch has been convicted and is in jail. So these organizations don't last long. And so I would encourage you to that instead of calling those 1-800 numbers and paying for service, that you call the tax clinic and at least see if you qualify for assistance. Because what we do is we also do what are called offers and compromises. And offers and compromises are basically what you hear in terms of tax debt, in terms of, I'll solve your tax debt for pennies on the dollar. And what will happen is that the IRS likes to resolve debt. If you don't have enough money to pay your debt, say you're on Social Security, you're making a very fixed income, you don't have equity in your house, you can submit a very small offer. Recently I had someone who owed $20,000, and we offered the IRS $50 to resolve that debt, and they accepted it. And as long as you file your tax returns for the next 5 years, that debt will go away forever. And so it's worth giving the clinic a call to see if you qualify for that. Now, even if you don't want to submit an offer in compromise, there are other options for you when you owe the IRS money. And this is something that the IRS will never tell you about. You won't find it written anywhere on formal in the Internal Revenue Manual. You won't find it on the IRS's website. But you could qualify for what's called currently non-collectible status. So if you have a debt assessed and the IRS is levying your bank accounts, they might even be levying your Social Security benefits. And if you have a levy on your Social Security benefits, you should call the local taxpayer advocate's office in Augusta, the IRS taxpayer advocate's office. They'll remove percent levy on Social Security. But if you want to go into, you can, instead of doing an offer in compromise, you can actually go into what's called currently non-collectible status. So what does that mean?